When you think of starting to invest, it can often feel very overwhelming. ISAs, ETFs, stocks, risk. Where do you even begin? But the truth is, you don't need to be rich or a financial expert to start. I began investing just under a year ago, and today I'm breaking it down into 5 simple steps you can follow today, even if you've only got £50 to spare. Let's get straight into it. So a quick disclaimer before we start, I'm not a financial advisor, therefore this video is purely for education and sharing what I've learned on my own investing journey. Always do your own research and make decisions based on your own situation. So let's get into step 1. Why should you even invest in the first place? Because saving money in a bank account is great, but inflation silently is eating away at your profits. Right now in the UK, inflation is still around 2 to 3%. That means if your money isn't growing, it's actually shrinking in value. Investing, on the other hand, allows your money to grow faster than inflation, especially when you're thinking of the long term, 5, 10, 20 years. It's how people build real wealth over time, and with the right tools, it's easier than it's ever been. Step 1, before you even think about starting to invest, you need to sit down and ask yourself, why am I investing? Is it for retirement, a house deposit, a future business? Your goals will shape your investing style. For example, if you're looking for more than 10 years, you can take more risk. Whereas if it's a short term, you'll want safer options. So write down your goal, it makes everything clearer. So let's move on to the first physical step, and that is opening an investment account. So if you're in the UK, the best place to start is with Stocks and Shares ISA. You want to avoid invest accounts, as I fell for this when I first started. The Stocks and Shares ISA acts as a wrapper that allows any gains or dividends you make to keep them 100% tax-free, as long as you put in less than the $20,000 per year. Apps like Vanguard, Trading 212, Freetrade or Moneybox let you set one up in minutes. Just make sure it's a Stocks and Shares ISA and not a cash ISA. I personally use Trading 212, so let me show you what that looks like. So as you can see, my Stocks ISA currently has £5,712. But on Trading 212, there are 4 accounts you can choose from. You have the Invest account. This is what I initially started with, and you can still see where there's a small part left. And that was a big mistake I first made. CFD I also tried. I'd recommend avoiding this, especially as a beginner. And then you have the Stocks ISA and the Cash ISA. The Stocks ISA is the one you want to be in. From here, Trading 212 allows you to invest and create pies. As you can see, I currently have 4 pies that I documented in my previous video. So if you're interested to know what's in these, go and take a look. But once you've built a pie with your relevant holdings in, such as this is one where I hold several ETFs. Once you've built this, you can then go to the Invest section and invest your funds. And one of the most important things I've found is this auto invest feature. This allows you to stay consistent without even thinking about it. So you're allowed to, you can schedule posts. So you can schedule deposits on a daily, weekly or monthly or even bi-weekly basis. And it gives you a projection at the current rate. So currently, if I continue to invest my £8 per day for another 40 years, I would have contributed £116,000 and potentially a 14% annual return, I'll have 8.13 million. And as you can see, the graph just gets exponentially bigger the longer you invest. Therefore, the earlier you start, the better. So now let's assume you've decided what you're going to use as your platform. Now comes the even bigger question. What should you actually invest in? Well, in my personal opinion, for beginners, the best place to start is with index funds and ETFs. These are baskets of hundreds of companies and sometimes thousands. So your money is automatically spread out, lowering your risk and leading to more steady growth. A popular one in the UK is the FTSE Global All Cap by Vanguard. This invests in over 7,000 companies worldwide. You could also take a look at more niche ETFs such as the S&P 500 or even the Nasdaq 100. But the fewer companies, the more risk. However, try to avoid picking individual stocks as your main holding and focus on low-cost diversified funds instead, as this lowers your risks, whereas individual stocks carry a lot of risk, as if one stock falls by 10% in an ETF, you might not even notice. But if your whole portfolio falls 10%, you're going to notice. So let me show you how easy that is to find on 212. So when you open 212 and go to the search tab, it gives you several different categories to pick from. And ETFs, you can go straight to the most popular ETFs. And this will give you a long list of the most popular ETFs currently on Trading 212. And as you can see, there are lots of different providers and lots of different types. So you have Vanguard, iShares, Invesco, and if you keep going, you have SPDR and a few others. And they will all provide the S&P 500 in different variations, either accumulating, distributing, and then each of these will also hold different expense ratios and so on and so forth. So doing some research into which company you want to hold your ETF in also takes some time. But it's as easy as that. You would then pick your stock and you can straight away buy that easy. So now you've invested, and now I want to link back to the most important step, and that is staying consistent. So once again, investing once is great, but now you need to try and really build that consistency. So set up a monthly direct debit, or even just £50 a month you put into your Trading 212 account at the start of the month, and allow it to auto invest into the pie. This is known as pound cost averaging or dollar cost averaging. It smooths out the market's ups and downs, and this means you don't need to panic when your investment drops in value. The market goes up and down, so just keep investing regularly and give it time to grow. Finally, the most important one is that you'll never stop learning. The best investors will never stop learning. So follow creators such as myself who talk about investing, read books like The Little Book of Common Sense Investing, and track your progress every few months. You'll be amazed at how much you pick up just by doing that, and things you'll learn yourself along the way. To recap, start with your goals, open a stocks and shares ISA, invest in simple ETFs and stay consistent, and keep learning. If you found this video helpful, I'd really appreciate if you could hit the like button and subscribe. And let me know in the comments, what's stopping you from investing right now? And if you'd like me to break down exactly how to pick your first ETF or some of the ETFs that I've picked, this video is coming soon, so I'll see you over there.